The big economic news of the week was the unexpectedly large jump in inflation and how it'll be viewed by the Reserve Bank board meeting on Tuesday. The other significant issue bobbing up was Prime Minister Julia Gillard's push to strengthen trading ties with China. To see how all this played out, I spoke to HSBC's Paul Bloxham, who was a senior advisor within the Reserve Bank Economic Analysis Department and who was in Beijing this week. Paul, does this week's CPI mean that we have an inflation problem here or not?
I think the CPI numbers we saw this week are the beginning of the upswing in inflation. I wouldn't call it an inflation problem, but I think it's the beginning of a sequence of inflation numbers that will start to look stronger than the previous set. And it will start to be a concern for the RBA. They will start to then be thinking about having to lift rates, particularly given it was underlying inflation that picked up.
But the Reserve Bank has been putting up rates already. Do we conclude that that just hasn't worked?
No, I think that the RBA has lifted interest rates in line with the economy as it's been expanding, and that has held inflation down, or it's been part of the story for holding inflation down thus far. The Reserve Bank will need to continue to lift rates gradually over time in order to continue to contain inflation. The outlook for Australia is still very strong. Commodity prices are very high, and the mining boom is massive.
So what's your call on when interest rates will go up and by how much?
So we expect that the next rate rise will be in July or August, and that we'll get another 50 basis points this year, by the end of this year, 100 basis points over the coming year. This is on the back of the fact that we expected, and we still have in mind, of course, the inflation numbers established, that inflation is picking up. The labour market is tightening up, and I think a key risk for the Australian economy is that with the labour market tightening up, you start to see wages rising in a solid way.
What's your response to the evidence that retail sales and therefore the consumer side of the economy are not doing very well?
It's necessary that the consumer isn't the bigger part of what's going on in the Australian economy right now, because we've got a mining boom. You can't have an investment boom and a consumption boom at the same time. And indeed, that's what the RBA is doing. By lifting interest rates, they are containing consumption growth. They are containing the consumer. And that's necessary in order to contain inflation in the economy. I think we will start to see signs that the consumer revives a bit. We are seeing income growth has been relatively strong as a consequence of the labour market being tight. And that will mean that the Reserve Bank will, in fact, need to lift interest rates to make sure that doesn't pick up too much.
The other country that's got rising inflation is China, which is where you are at the moment. How serious are the authorities in China about dealing with inflation?
I think they are very serious, and they have been very serious. So we have already seen them tightening the monetary policy tools fairly aggressively to try and slow down inflation. We still think that there's a little bit more of a rise in inflation yet to come, but we have in mind that inflation will slow over the second half of this year, and the authorities seem to be having some success in their endeavours to slow inflation down.
And what does HSBC think China's growth is going to be over the next year or two?
Well, we have in mind it slows a bit this year, a little bit under 9% growth this year, and a similar sort of rate next year. And I think what's going to happen, or our view is that they do contain inflation, get inflation to slow somewhat, and that allows them to continue to grow at that sort of rate. I think in the medium term, we're going to see Chinese rates of growth have to slow a bit more even, and we know that the Premier has announced that their objective is to get growth down to 7% in the medium term.
Well, you also happen to be there at the same time as the Prime Minister, Julia Gillard. How's she being received?
It's certainly a coincidence, that is. She's been received very well, I think. My sense is that she's done a very good, a sterling job as a statesman.
And what's the view in China about investing in Australia at the moment?
I think there's a lot of interest in investing in Australia. Indeed, I think there's a lot of interest from the Chinese authorities and the Chinese in terms of investing overseas in general. They're sitting on a large stock of reserves. Reserves have just gotten over the 3 trillion mark, and they're looking for opportunities for other things to invest in. So I think there's adequate capital that's looking to flow to the rest of the world, in particular to secure supply chains in terms of commodities. And of course that affects Australia a lot because we're a large commodity producer and we're doing a lot of investment, and we require a lot of funding from overseas in order to do that.
Thanks very much, Paul.
No problem.